and welcome to the World Battery Metals and Mining News for the 6th of August, 2024. Canada hits surprise trade surplus on energy, gold exports. Canada found itself with an unexpected $638 million trade surplus in June, surpassing economists' predictions of a continued deficit, thanks in large part to the expanded Trans Mountain pipeline boosting crude oil exports and surging demand for gold. Exports spiked by 5.5%, while imports rose by just 1.9%, heralding the impact of increased energy product shipments, especially crude oil, which saw an 11.7% rise. The new pipeline's increased capacity facilitated larger volumes primarily shipped to Asia, though the robust demand for gold, particularly post-geopolitical tensions, also played a pivotal role. Meanwhile, Canadian consumer demand remains resilient, with imports of passenger vehicles significantly up. Although these positive export figures stand in sharp contrast to April and May's performance, suggesting a potential boost for future GDP, it's worth bearing in mind that such fluctuations might not be entirely stable month to month. The country's trade surplus with the U.S. further widened, indicating a consistently strong cross-border trade dynamic despite global uncertainties. Copper price hovers above four-month low struck during global rout. In a day marked by mixed outcomes for metals, copper showed stability, lingering just above a four-month low experienced during a chaotic global sell-off. While aluminum saw minor gains, zinc continued its downward trajectory following a turbulent start to the week that obliterated billions in market value. The root of this turmoil largely stems from China, where sluggish manufacturing and a dismal housing sector have sapped confidence. Adding to the anxiety are fears of a hard landing for the U.S. economy, sending jitters through the financial markets. Despite these uncertainties, broader markets displayed some resilience on Tuesday, with notable recoveries in Japan's share indices and a rebound in U.S. stocks. By late afternoon, on the London Metal Exchange, copper held steady at $8,899 per ton, while zinc fell by 1%, nickel edged down 0.1%, and tin appreciated by 1.2%. Copper 360 reboots Rietberg mine in South Africa. Copper 360 has triumphantly restarted underground mining activities at the historic Rietberg mine in South Africa's Northern Cape province, breathing new life into an area that hasn't seen copper production in over 40 years. With nearly 4.8 million tons of ore grading at 1.27% copper, containing 60,800 tons of metal, this rejuvenation marks a significant milestone in South Africa's mining chronology. Initially aiming for an output of 12,000 tons per month at a 1.6% grade, the ore will be processed using the newly acquired modular flotation plant, targeting impressive recoveries of up to 85%. Production is set to increase to 45,000 tons with the commissioning of a second plant. CEO Jan Nelson lauds this event as a herald of a new era for Copper 360 and the Northern Cape, highlighting the shift towards producing copper concentrate, which will drive 80% of the company's revenue. This strategic revival of historical mines, once spearheaded by industry giants Newmont and Goldfields, underscores the company's stronghold on 70% of the Northern Cape copper belt. A rational step forward in mining, finally propping up an essential industry in an area with untapped potential. Arcadium Lithium pauses expansion plans on prices, supply glut. Arcadium Lithium plc has decided to suspend or delay two of its four expansion projects due to an oversupply in the lithium market and a sustained slump in prices. Specifically, Arcadium will hold off on investing in its Canadian Galaxy project and is considering bringing in a partner. Additionally, the timelines for two lithium carbonate projects in Argentina at Salar del Hombre Muerto will now be staggered rather than being developed simultaneously, saving the company approximately $500 million over the next 2 years. However, the Nemaska lithium project in Canada remains on track. Despite these adjustments, Arcadium's CEO Paul Graves maintains confidence in the long-term demand for lithium, but acknowledges that the current market conditions do not warrant an aggressive supply ramp-up. It's a smart move in capital allocation, though it's a pity it took a market downturn to push this level of prudence. Gold price sinks lower after sharp sell-off as equity markets stabilize. Gold prices continued to decline on Tuesday, suffering a 1% drop following a 1.3% fall on Monday, driven by a stronger U.S. dollar and diminishing hopes for Federal Reserve rate cuts. The market turbulence on Monday forced traders to sell gold to cover margin calls. Despite these recent setbacks, gold is still up over 15% this year and hit record highs just weeks ago. The June trade deficit figures, combined with general market panic, further fueled the decline. However, central bank purchases and long-term expectations of Fed rate cuts remain supportive factors for the precious metal. In contrast, palladium and platinum saw gains, whereas silver also experienced a decline. Calibre secures approval for third open pit at Valentine gold mine in Newfoundland. Calibre Mining just secured federal environmental assessment approval for a third open pit at their 100% owned Valentine gold mine in Newfoundland and Labrador, poised to become the largest in Atlantic Canada. With major provincial mining and surface leases already in hand for Barry, Calibre CEO Darren Hall announced that engineering is now 98% complete. Construction has jumped from 50% to 77%. And the operation team is fully equipped, aiming for first gold by Q2 2025. The project, spanning mineral reserves of 2.7 million oz and further resources, promises an average annual gold production of 195,000 ounces over the first 12 years of a 14.3-year mine life, with a notable 22% after-tax return rate. Despite these positive advances and a thumbs-up from Canaccord Genuity, investors seemed less thrilled, with shares dipping 4% to $95. This is all the more baffling, given the substantial progress and optimistic projections. Maybe the market's just having a Tuesday morning moment? AngloGold says free cash flow to double in second half. AngloGold Ashanti is basking in the glow of high gold prices, forecasting over $400 million in free cash flow for the latter half of the year, thanks largely to its revitalized cost performance and solid gold production. CEO Alberto Calderon announced a staggering 413% increase in headline earnings to $313 million for the first half, a leap from $61 million last year. Improved operations, particularly in Brazil, and a 450% hike in the dividend speak volumes about the miner's turnaround. With gold prices up nearly 19% this year, peaking at $483.60, and a strategic program to unlock full asset potential, AngloGold is not just riding the golden wave, but outpacing it. The growth in cash flow, driven by smarter operations rather than just market conditions, underscores AngloGold's impressive performance and strategic execution. Cerrado Gold avoids new capital costs and plan to expand Don Nicolás mine in Argentina. Cerrado Gold has revealed plans to launch production at 4 sites in its Minera Don Nicolás (MDN) mine in Argentina without further capital investment, thanks to pre-existing infrastructure. The recently published Preliminary Economic Assessment (PEA) attributes this cost saving to the completion of a heap leach pad and extraction circuit, along with pre-stripping activities. The new PEA estimates a net present value of $111 million over a 5-year lifespan, with an average annual gold equivalent output of 55,869 ounces. CEO Mark Brennan highlighted that these results pave the way for stable operations and resource growth aimed at extending the mine's life. Interestingly, this comes as gold prices hit astronomical heights, proving once again that when gold glitters, investors bite. Although the PEA outlines a promising financial outlook with $49.2 million in annual EBITDA, it's worth noting that Cerrado's stock shares remain conspicuously flat, trading at a mere 14 cents apiece. Perhaps investors are holding out for more than just golden promises. Indian gold industry forms self-regulatory body with WGC backing. India's gold industry, with a nudge from the World Gold Council, WGC, has launched the Indian Association for Gold Excellence and Standards, IATH, to rebuild sagging consumer trust and ensure ethical, transparent, and sustainable practices in the bullion trade. Let's face it, being the world's second-largest gold consumer is hardly a badge of honor when unscrupulous practices taint the market, undermining confidence among buyers and even the government. With IAGs, they plan to introduce an accreditation symbol signifying rigorous audits, though the specifics remain opaque. Industry bigwigs like the Indian Bullion and Jewelers Association and the Gem and Jewelry Export Promotion Council are all on board. The WGC, not one to skimp on showmanship, intends to hype up the IA through a consumer awareness campaign that it will generously fund. Finally, while gold demand dipped by 5% in the last quarter, the WGC optimistically predicts a rebound as 2024 progresses, thanks to a timely reduction in import taxes. Anglo Asian to resume normal production after tailings approval. Anglo Asian Mining has secured the go-ahead from the Azerbaijani government to raise the wall of its nearly full tailings dam at the Gedabek mine, allowing it to resume regular operations. The company had submitted plans in March for a 7-meter elevation, and the project received technical and environmental endorsements from authorities. Construction will be done in 2 stages, with immediate mobilization already underway to complete the first 2.5-meter raise within approximately 3 months. CEO Reza Vaziri announced that full production will resume within a week, marking the end of a year-long disruption. Not only is production set to normalize, but the company is also eyeing significant growth, aiming to transform into a multi-asset, mid-tier copper producer by 2028. The market responded positively, with shares rising 7.8%, raising its market cap to £106.5 million. Now, let's just hope their dams hold up better than some politicians' promises.